It is Saturday, March 7th, 2026. We're going to look at gold, silver, and the miners. Not necessarily in that order, though. So, start with Agnico Eagle Mines, which did print a new historic high of 255, but it's currently down $30, 12% at 221. That's it's a pretty ugly downside reversal after just 5 trading days. I mean, it's a problem, and of course, why are the miners going down? Why? Well, gold, silver, yeah, but the main market, the main equity market's going down now, and that's a problem. This will apply to all of the mining stocks I talk about in this little segment. This is a problem. If you're bearish, the main market, almost 85, 90% of the time, the miners are going to get dragged down to some extent. I am absolutely net bearish equities into April, which isn't that bold a call. I'm only talking about maybe another 4 or 5 weeks of net downside, whether that's to S&P 6100 or somewhat lower than that. I don't know, but I am absolutely net bearish. Which, if I'm right, then the mining stocks are going to be net lower to some degree. Same for silver and possibly even gold to some extent. But yeah, this isn't great, is it? 12%. That's a big old drop. Moving on. First Majestic Silver. Look at this. 19% down. That's pretty bad. And we continue. Anglo Gold Ashanti. Oh, there's a trend here, right? There's a trend. Down 16.5%. I mean, it did print a new historic high, 129.14, but again, look, we have a full reversal here. Horrible. I mean, now I'm starting to wonder if I'm right about the equity market, net lower for March by say, maybe just 4 or 5%. We're going to see some bearish engulfing candles on here, which would bode bearish for at least April minimum. Barrick Mining, another one down 10.5%. Now this isn't, it's close. That's almost a bearish engulfing candle. And we're only 1 week into the month, so this probably will get a bearish engulfing candle, in which case, basic support would be the 10 MA 35. That's $10 down. That's another 22, 23%. Just basic downside. So the miners looking short-term bearish. Core mining, another one, down 16.6%. Bearish. DRD gold down 15.3. Bearish. Endeavor silver down 19.6. Franco Nevada, new historic high, 285, but another one is reversing down. Goldfields down 14.3%. I mean, these are big drops, right? If you're a relatively short-term investor, these are the biggest net monthly declines in terms of dollar value, actually, in terms of nominal dollars. This is like, these are the biggest drops you've ever seen in many of these stocks. Because look at the price action here. We're talking like $1 or so either way. Now we're talking about $8. Heckler Mining, 18.1%. Another one. Note this spiky candle marking peak uh peak bullish hysteria. February was up, but we've taken out the February low. 10 MA is 14s. That's another $6 down. That's 30%. 30% downside. Looks pretty straightforward. I mean, hell, on one level, you could say, is even part of me asking me right now, why would I not short the miners? Because these are big drops here, possible. But I have a personal rule. I don't want to be short miners, gold or silver. I'd rather just watch them fall and then buy them back cheaper. Moving on, Harmony, 13.9%. That is a bearish engulfing candle there. Kinross Gold, 12%. And look, they're all the same, aren't they? They're all horrible. Newmont, down 10.4. Again, note the January candle, spiky, very spiky. Pan American Silver, 13.1%, bearish. 44s is the support. Royal Gold, down, what's that? 6.6%. SSR Mining, which had I'm not sure if that was a new historic high, was that? Just checking over here. 33.68. No. So it came close to breaking a new historic high. The reason it got initially higher was because they had a 1.5 billion asset disposal of a Turkish mine. This company has had all sorts of problems with Turkish mines, so I'm guessing they just had enough of it and they sold it. But yeah, that was I think that was a Turkish mine disaster. So the stock collapsed and did recover that. Well, it's a hell of a run, right? It's basically 900%. But yeah, short-term bearish. Wheat and precious metals. Okay, new historic high, 165. But yeah, down 10.3. Bearish to the 10 MA, 115s, which is $31 down. That's about 20, 22% or so. All right, master miners. Let's go to gold. Commodity gold. We'll start with weekly, actually a daily. So Friday was bullish, but again, I mean, you could even draw a bullish pennant on here. I do have one on the GLD chart. See, there it is. So you see there's this giant bullish pennant in October, November, but played out really well. And we do have one here as well. This is interesting. I mean, certainly if GLD can push above, we'll just call it that high, 492. If you see GLD above 492, that'd be pretty damn bullish for into the spring. But I would be open-minded to the notion of we could just trade sideways all the way into well, at least I mean, yeah, in theory it's gonna have to play out, right? By the end of the month. And typically the breakout is usually 75% long, which would mean if gold's gonna break out, it's gonna do it Fed week. Yeah, Fed week. There's a possibility of a rate cut March 18th. Maybe we'll see a breakout then. Maybe. Let's jump back to commodity gold. Go to a weekly. So we pushed up, but we did call back $133 on the week. I will note weekly momentum has started to tick back lower. That is a problem. In theory, we could tick back all the way into April. On a monthly chart, let's get a closer one. That'll do. And we were overbought. Momentum started to tick down. I do lean a little bit bearish gold, but I wouldn't short it. That'd be kind of overly risky. SLV on a daily. So SLV does not have it does not have a bullish pennant like gold does. It's a bit of a mess. I mean, you can see there's I mean, that is a little crash wave. 2-day bounce, but black candles, dropped again. I think that was like a 16% drop. Another black candle, bam. Black candle, bam. Little rally, black candle, spiked. Then we had this lower high Didn't get to green gap. Still haven't done that. A little bit of chop. We had a black candle on Wednesday. That played out. Thursday had a reversal. Higher on, yeah, Friday's close was up $1.67. I would start to take silver seriously if you can see SLV above. What's that level there? Yeah, just call it $80. I need to see SLV up above 80. But that's going to be really difficult if the main market gets hit next week for whatever reasons, the war, data, whatever. I think we have a pretty high, I think we have a high probability of coming down to at least test these 65s, and that's $10 down. It's a long way. If we jump to a weekly chart, you see the lower high, we're down. Here's the thing that most people haven't noticed. Weekly momentum is ticking back lower again, and in theory, it's going to turn negative at the Monday open. You can also look at the MACD line here and just say, hey, look, we're going to get a bearish cross. When you get these bearish crosses, then they're pretty important. I wouldn't dismiss them lightly. I mean, look, in theory, if 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 the S&P gets whacked down to at least 6,100, never mind anything lower, I think there's high risk that we're going to see SLV come down to 50, which is the old threshold from October. And 50, of course, is 33% down. That's a long way. But we're already down 10% in the first 5 days of March, so it's not that crazy. And as someone who wants to be long silver and gold and the miners for the long term, I'm like, hey, just do it. Just get it over with. Just whack this commodity down, and I will buy it all back again at 50, and then trade it up for the rest of the year. In theory, that's my hope. Actually, I'm absolutely midterm bullish. The metals for various investment purposes, reasons, and industrial demand, all of that. Then I'm not even going to go down the road of the COMEX issues, but you can argue we're even going to see maybe we're just seeing some kind of gigantic retrace, like an A, B, and a C down to maybe 50. But I do lean bearish silver. Just jumping on a. I mean, yeah, there's commodity silver on a weekly. That commodity silver on a weekly actually actually does have a bearish engulfing candle. And also you can see the momentum here on commodity silver is going to turn negative as of Monday. That's a pretty bearish, in fact, it's a very bearish setup. Doesn't mean Monday will be down, but it does mean that in theory, next week will probably break a lower low. Just we should be at least. I got to think we'll see commodity silver at least down to 80. You could even see 75. Depends on how the S&P trades. Speaking of which, let's just jump to that. Why not? I can cover whatever I want to cover. Isn't that cool? I like this chart. It's my favorite weekly chart, which is kind of a weird thing to say. But look, it's a lot of chop. It's an amazing ramp, right? Trump tariff flow. Powers up. Look at the powerful of that candle. Spike floor. A little chop on the second week, and then bam, bullish engulfing candle, which gives you absolute confirmation that we're going up. Just powers up. What a run. But you can see the rate of incline, the market's getting tired and tired and tired, and there we go. January 7,002, and we rolled over. But slowly, of course, with a lot of chop. Again, I could understand some people even thinking, hey, we're going to push up to 7,000. I disagree with that. I think we're in the process of seeing an overdue retrace of 48.35 to 7,002. I think my basic target is this. The 38% fib at 61.74. So, it's roughly 10% down. It's not that bold. It really isn't. So again, if you think if the S&P is down around there, there's no way that silver or the miners are going to be net high. They're going to be net lower to some degree. That's just how it is. The gold bugs don't like it when I say that. They hate it. They hate it. But that's how it is. If you're bearish equities, you got to be bearish the miners and silver, but maybe even gold to some extent. Again, short term. We're not going to get hysterical about, you know, short term stuff, but it's tradable. The monthly chart, by the way, it is interesting to see it was 61% fib. It's around 5,600. I accept that's a long way. That's a long way down. Also, there is a gap here, right? That's where we had a bear flag last March. So it's kind of a if we can't hold 6,100s, it's kind of a magnet down to around 5,600. I'll show you a monthly chart and I'll end with that. Yeah, look at this. See the 10 MA 6670, 6678. If we take that out, then you're looking at the old high from last February, 6100s, which isn't that low, right? We could do that. We could do that this month. And the most bearish case would be coming down to around, I mean, guess on here it's, 55, 5600, somewhere around here. You see there's a lot of support around here. Look at that. Look at this, 5600s. You could draw a little dashed line across here to about there. So yeah, the most bearish target for April will be around 5600, which is that kind of lower Bollinger support line, and also that fib. But I accept that's crazy talk right now. First things first, 6100. Again, I'm even going to highlight a 200-day on here. Look at this. The momentum's probably going to tick down on Monday, right? Right? It will. It's going to tick. It's going to have to tick down on Monday, unless there's some crazy news that world peace has been declared and that you know Trump is emperor of the world. We're going to tick down. In which case, I wouldn't be surprised to see us gap down into purple gap and maybe test for 200-day, and then maybe we'll bounce because we'll have the opening gap, assuming there is one, and then we have Friday's gap. So I'm guessing this is my plan overtly is this. If I have cut short a couple of the financials, if we're down here on Monday, I'm gonna close out. I'm gonna hope we gap up. We're gonna bounce up to here and then reshort. That's my guess. And no, I don't have a time machine. If only I did. God damn, that would make things a lot easier. Now look at this, another bonus chart. VIX. VIX was a VIX Friday candle in the VIX was exceptionally unusual for a Friday ahead of the weekend. We rarely see that kind of power. So, if equities do gap significantly low on Friday, on Monday, you could be looking at 40 VIX without too much trouble, and then maybe cool back all the way back down to I mean, you could cool back down to 20 even within a couple of days. And actually, when I think about it now, yeah, I'm really starting to think about this. This, as I mentioned, it the fact of okay, if we can maybe get a capitulation low on Monday around the 200-day, we have two upside gaps to Friday. We have and the market will inherently be inclined to go up into the Fed. The Fed will be on the 18th around here. So if we do print 40 VIX on Monday, think we could cool back all the way to 20 into the Fed. The market, again, the market will be inherently inclined to go up into the Fed. That's just has historically how it is. So if we have a washout on Monday, then we bounce all the way into next Wednesday, and then I would look to reshort on the basis of net bearish into April. Anyway, that's just a spurious idea that's just come to my mind. And again, we are. I don't think. I'm guessing we won't see a rate cut on the 18th of March, but you know, it would have implications for gold and silver. We did again. Gold and silver would inherently be bullish on a rate cut, and I don't think the market's really assuming that right now. But I mean, the Fed could do it on the basis of the jobs data, which was garbage on Friday, right? Anyway, so I'm sure that semi-coherent list of issues might be useful. It's kind of useful to me in the way that I'm now thinking, yeah, we could see a washout on Monday and then kind of be net bullish equities into the Fed, and then I should reshort. So yeah, if I sell out tomorrow, then I can maybe sit back and just watch for a week, perhaps. Depends on the price action. Again, if it's also news events. It also depends on if we take out the 200 day. If we're trading under the 200 day, then we could just keep falling. But I am guessing we will kind of hold. We'll find a floor. So yeah, my guess again, if we drop on Monday, the RSI will be 30, will be oversold. The momentum will be on the very. I mean, look, we're already on the low end here. We've been in terms of underlying price momentum, we've been coming down since mid-January. Yeah, look at this, just underlying weakness. All right, that's kind of interesting. Anyway, at least to me. I'm not sure if any of you got anything out of it, but yeah, give me a big drop on Monday morning, and I'll close out my financial shorts, and in theory, either I trade exceptionally light or just do nothing until the Fed and then reshort. I like the idea of that. The more I think about it, the more I like it. Because I wouldn't mind taking basically a week off, just just watching. Because I've been heavily involved recently. Had a great number of trades, especially in oil. And also, you can make if oil was to peak tomorrow in the morning, whether it's 100, not on Monday, $100 or so, and then cools back, you could maybe hope for oil to cool back for a week or two, week and a half maybe. And that would make for a good buying opportunity, right? On the premise of net upside in oil. Anyway, this was supposed to be a video just about gold, silver, and the miners, but it does make me think of other things. I will wish you a good weekend, and yeah, be good.